and welcome to today's tutorial brought to you by Tooth and Tick, where today's topic is the head and shoulders top. The head and shoulders top is a reversal pattern. You're looking for a bullish trending action environment to change and turn and go bearish or short. The head and shoulders patterns in general, they are very reliable, they're very common, and while we like seeing them in large basing periods after substantial trending action because they have such power when we see them in that environment, they do trade on a 1 minute basis, a small time frame, all markets, all instruments, how volatile or not volatile. And so therefore we need to see them more in real data. And I'm going to do another video, which you'll find in the library, on the head and shoulders, both tops and bottoms put together. And then we'll look at textbook version today of the classic head and shoulders top. Now, as I said, we're wanting to focus on this top, and we're wanting it to be a reversal pattern to go short. We're going to look at it in a classic textbook fashion today, and we need to see the action unfold bar by bar the same way we as traders always look at it, and we get a nice big bullish trending action in the background, and we hit our head someplace up here where sellers are willing to step in. Now that's the definition of resistance. That's the classic definition of resistance. There's enough sellers that step in and stop the advance of price. So we hit our head on resistance. Now we know nothing about whether this trending bullish action is through at this point. All we know is that there's a change in the pattern. That's all we know. My version of how to trade reversals is to establish this very first line in the sand. This is when something changed enough to change the picture, and therefore I need to pay attention. Then I look for where's the muddy trench, where's that middle ground area, that tug of war, where the guys in there are getting hit on that number a lot, and any place close to that number you're inside there. How big is it? Sometimes it gets down to a tick, sometimes it's wider. Again, it's trader's choice, but you're looking for the place where you got buyers and sellers that are willing to exchange hands of the contract. They are willing to let go of it. You're wanting to see the volume push once someone gains control. In this case, the bears gain control to push us into that low. And then you see the bulls gave us enough on this big green bar to push back up. That means we've literally established and confirmed that as a first support. Now that's all we know. We're looking at this moment in time at a very bullish trending environment where the first deeper pullback, you should be a buyer here. This should be a buy into the trend trade until proven otherwise with that big trend in the background. And this middle ground area becomes your first test. That's your first place to be looking for some profits. We see that every bar, there's quite a few bars here in the background that had to argue over that muddy trench. People got sloppy in there. So we're looking for this pattern to continue and say, whoa, what a big nice thrust we got here. Again, the bulls took control of the volume above your muddy trench area and gave you another push. It wiped out the previous swing high. You now have a new high. And literally now we don't know anything again about a reverse because we've now put in a new higher high. So are we going to put in a new higher low and continue the stair-stepping pattern? And this was merely a little sneeze, a hiccup, and you wish you had taken that because now we're going to break higher. That's what we don't know. Is it a head? Is it a number two effort? Or is it a new breakout? Well, if you took this bullish trade and it gets up here, aren't you going to be looking? Come on with it, come on with it. Because if you don't, you're going to be looking for a false breakout, and that group's going to want some profits. The first group up here says, man, we got up here, but this was a pullback bigger than I wanted. I better be taking some profits. So there's a lot of bulls taking some profits in this price range because the very first establishment of resistance. Enough of them came out there that it weakened either side of the position here, and that's why that thrusting action may or may not go on with it here. So as we complete the pattern, whoa, there's the answer. That thrust bar got nailed. And they push back through the muddy trench. And now again, you're faced with, again, the other end of the spectrum, however many days, minutes, ticks, years. This pattern's taking to unfold. Whatever your instrument is, this is now your second effort. Will the bulls step in again and support, or won't they? It's a 2-2. Both sides have now had pressure on the extremes of your reverse pattern. And again, we're working a perfect head and shoulders top, which we know they have to have 3 efforts, and that's what we're looking for them to do again and push through the muddy trench. And again, look at the argument. Almost every bar has had to do some conversation on that number. How big is that number? How much money is in that number? But you being able to see it is the point. Whether you want to trade in that small gap, you don't. Unless you're a scalper and you're looking 1, 2, 1, 2, 1, 2, 1, 2. That's what's happening in there. So you get this third push. Can it make a double top? Can it equal the previous high? Can it get through your first swing high efforts? And again, I'm highlighting the perfect textbook one. And we say no. It cannot take that pressure. The bears take over that third time effort, and they do happen a lot in threes. That third time effort proved to be the charm. Now you have an established down trend, and the quickest definition, point 1 up here, point 2, high, lower lows, lower lows, lower lows, lower highs, lower lows, and you started a real change of trend. How soon do you want to take the trade? So let's talk about that. Very first and most aggressive option is to try to take it up there on that third time as the charm in your reversal pattern where you have it highlighted as being the real line in the sand. Do you want to take it on that side of the line? Where do you see yourself as being able to pull the trigger short here? When do you see the bulls not maintaining control? Option number 1, most aggressive, you're taking it up here. Your stop placement on all of these are directly above it. So you would be looking at the swing high top head. If they take that out, then it's probably not going your way. However, thrusting bars with them, scoop them whatever they can get, is one of the nuances that we'll discuss in our other video when we look at real charts. Textbook says we make a right shoulder very close to equal the left shoulder. 1 to 3. Okay? 2 can stick out there all at once. The higher the better. 1 to 3 is what you're looking at for resistance definition. Get above it, poke around, and then let the bears take control. And yet typically, on the topping side of formations, they don't give up easily. They just don't give up easily. And even if what they're doing is unraveling that long trade, they've been wanting that greedy price that was above that muddy trench. Well, option number 2 is an additional entry that I'm going to give you based on me and my rectangle work. Option number 2 says, watch that third happen. Then let them come to the muddy trench. Show you the battleground and who takes control. You're still looking for an entry with a stop just immediately above the trench here on that side of the line, but you're looking for a nice high entry that's in front of what you're hoping is a breakdown. And then that brings us to the classic textbook definition of when to take it with the breakdown. Now that's my least favorite, but you're looking for a price on your support line that finally lets go. Whatever that is for you. The fourth option, which is more conservative, I like a lot better and statistically has very high odds to be a great trade, but it doesn't happen every time. And that would be waiting for the trade to break down, and then it has to confirm, which means that that low on the breakdown bar has to be taken out to actually be considered confirmed. Or is it my reverse that has to be taken out that's confirmed? Or is it what they call a neckline here? And that neckline would be swing low, touch to swing low 2, touch to this swing low, and your neckline wave break would be right in here. You could consider that as a neckline break. So several different trader options about how to do the calculation. all of which work if you've identified the pattern as a true big reversal, and that's really what it is. Guess what? This first target, which is that solid red line, is going to get wiped out, and you're going to keep going and going and going, and you'll look at having runners and or trying to find other places to get in again in the short trade. That's how powerful the head and shoulders patterns can be. So let's do a nice little summation here and realize that to have a head and shoulders top as a reversal, we must have something to reverse. We've been trending bullishly, and that is what we're looking at in our background, and then things change. We get a push into a high where enough sellers will step in and say, take a pause, buddies, this is resistance. A little profit taking, how strong is it? Establish that muddy trench early where you can see those buyers and sellers fighting over a fill line on their targets. That swing high and low spread. Yes, with my method, you get that first swing high and low, and you can add that target if you want for that full top swing. That is the definition of a big pattern. Add that full target if you like, but I like working that at least that rectangle to start. Gives me a nice line in the sand and a real clear picture. That stop limit right above all of these entry options, first and most aggressive, is that right shoulder swing high price area. Number 2 is wait for that third high to prove and get them back in the muddy trench, and then let the bears take over. Classic. With the breakdown, wait for that swing low price and actually break through that price. And conservative is to wait for the retest on that breakdown price area. And again, use the box, use the neckline concept. We'll get into some of the nuances in the other video. So thank you very much. Today's topic has been that textbook picture of the head and shoulders top, and it's at the video and text description, and your chart examples for this pattern alone are on the website for you, along with those other videos in our library. Thank you very much, and we hope to see you again soon. Bye for now.